there, very excited to be talking to you today about buying real estate in Portugal. As many of you know, I am a US based investor and I've had my eye on Portugal for quite some time now. It is a lovely country which has gained a ton of international attention recently for being a top retirement location as well as for its Golden Visa program, where investors can purchase property around certain criteria and gain a residency visa. So I love Portugal because it's a beautiful place to visit and a quite comfortable place to live. And its property prices have been increasing for years now, even pre-pandemic. For example, they rose by 7% in 2017, about 10% in 2018, almost 12% in 2019. And of course, during the pandemic, prices really surged. But overall, many do consider Portugal's major cities to be undervalued still in comparison with other major European cities and still have room for growth. So Portugal also, of course, has a ton of coastline and some up and coming beach areas. So when I visited, I immediately said to myself, I should buy property here and have renters paying off my vacation and or retirement home, right? Why not? So we've been looking for property in the second largest city called Porto, as well as a smaller beach destination called Camina on the border of Spain. So of course, before you can buy a property, you do need to figure out how you will pay for it. Of course, you could buy it in cash, which is a bit more straightforward, but Portugal also offers foreigners the opportunity to get mortgages on the property. So today I'm going to share some information about getting a mortgage in Portugal and share with you a clip from a session I had with a mortgage broker where we go over the nitty-gritties of a mortgage product for a property that we were analyzing in Porto. So here are some fun facts about purchasing in Portugal. So foreigners, as I mentioned, can purchase property in Portugal with a mortgage, with a reasonable down payment and a competitive interest rate. So some banks are only asking for as little as 20% down, and historically interest rates have averaged about 2.5% over the past decade. And another bonus is that lenders will offer sometimes 35-year and even 40-year mortgages depending on the applicant's age. So property taxes are also quite low in many areas in Portugal, even in nicer areas, and much lower than in many US markets, that is. So let's dive into a real life example of what these numbers can look like. Here is a clip from a meeting I held with a mortgage broker in Portugal to go over the numbers associated with the purchase of a 300,000 euro flat near the beach outside of Porto that would make a great vacation or retirement home as well as a short-term rental property. This is on assuming a 300,000 euro property value.
Yeah. And you have the, as you can see, the percentage of finance is very bank to bank. Okay.
Yes.
Those are just simulations, viability simulations. You have here from 63 to 80%. So in terms, this is in the left side is variable, and
yeah.
in the fixed rate will be in the right side. You're talking about, as we see, we're talking about Euribor around 1%, 12 months. There is a bank that makes 6 months, which is lower rate, is 0.466. But this is a little bit tricky because, okay, because when you talk about variable rates, the rates are not completely variable. They are fixed for every year. Okay, they just recalculate the interest rate and the monthly payment every year when the Euribor is 12 months. Okay, so it means that it's variable, but in a year it will be fixed. Okay.
Interesting. Okay.
If banks use Euribor 6 months, the rates are lower because it's a shorter period. But instead of fixing the rate for 12 months, you will have a fixed rate for 6 months only. Okay.
Okay.
So you begin in the lower market rates, but if the trend is increasing, you will change. You will have a recalculation of the rates sooner than later. So if you look at the 12 months Euribor, we are talking about 0.1992, which were the rates on August. So the final rate for the customer, because margins are between 1 and 1.2, you have a rate for customer on variable rates around 2%. In one case is 2.19, the other one is 1.99, the other one is 1.4, but it's 6 months index.
I see. And so
rate.
that's CGD, and they also require quite a hefty down payment as well.
Yeah, they are
compared to the others.
Yeah.
So I see that if you put the bigger down payment, you get the perks, like they give the 420-month term.
You have, as you can see that when you talk about term, you can see what we talked before. There are banks that accept to go further on the 30 years.
Yeah.
There are banks that because you are asking for a secondary home, 30 years is the maximum. So you have two banks with 30 years, one with a little bit more than 30 years. Okay. What happens? Another important thing here is the question of other expenses. So if you pay, imagine in the middle, you have 80% of amount finance, 240, with a rate of 2.2, around 2.2, a monthly payment of 910 euros a month for 30 years in variable rate. And then you have the insurances, okay? Normally, there are two insurances banks always ask for. One is the property insurance. This is absolutely compulsory. It is the less expensive of all, anyway. We are talking about an insurance that varies from 10 to 25 euros a month, depending on the bank.
Very affordable compared to US.
Yeah, and of course that you have differences here between banks because minimum guarantees are different. Okay.
Okay.
So I would say that for a 300,000 euros of apartment to buy, you will pay around 20 euros a month. Normally this is paid annually, but I always put it in a monthly basis in order that you can compare. Okay. And then you have the insurance life. The insurance life is a different thing because well, it's more expensive, and especially is not fixed for all the contracts. So even if you have a fixed rates contract, the only thing is not fixed is the insurance life. Why? Because insurance life, you pay. There are two. You pay regarding the capital which is insured, which is the amount due at each moment. So if the amount is going down, so the capital which is insurance is going down, and you would say, okay, this is good because the value will go down. No, it's the opposite, because the impact of the age, because you are getting older, and the rate and the rate will increase. So it is expected that the value of the insurance life will increase at least in the first 2/3 of the contract.
Yeah. Okay.
And especially when you're talking about 30 years, even if you have 30 now, when you arrive to 50s, okay, the cost of insurance increase sharply. Okay, so we are talking about values. This is not something that you will not know because this is predefined on the contract. In the simulations I sent to you, if you look the pay plan, you will see what you will pay in insurance life in 10, in 15, and 20 years. But what I can say that this value will much more than double, okay, when you are around the 15 or the 20th year, especially if you have more than 50 years old. So this is quite, because the value is defined, the cost of insurance life is defined by the amount you are asking for a loan and the age in the beginning of the contract. And
Got it.
So the insurance life is a more heavy cost.
Yeah.
Especially if you keep the loan for 10 or 20 years. And in these circumstances, the Portuguese banks for non-residents and only for non-residents, they have a special product that allow to waive the insurance life for a certain amount of capital finance, or more than a certain amount of capital finance. What is usually the market is that there are some banks that waive insurance life with less than 75% of amount finance. which is the case in the bank in the
Yeah,
middle. Well, you have here the insurance life because you are asking for 80, but if you ask for
sure.
75, they will waive it.
Okay.
And there are banks that with 70%, that's why in the third column, I put 0 on insurance life, because in this case, with 70%, they waive the insurance life. They are not offering the insurance life. That means that you will not have insurance life. It's not a free insurance life. They allow you to make the finance without making insurance life
Okay.
alone.
Interesting. So this is life insurance in addition to whatever I already pay for as my life insurance. This would specifically cover if I passed, that they would get paid in the mortgage full.
Yeah.
Some of them don't require it, most of them do, specifically if you put less money down. And
Yes.
that will go up over time. The life insurance payment will go up over time as you get older. That makes
Yeah.
sense.
Well, what we see here when you say monthly payment loan, okay, or global monthly charges is what you pay by month, okay, every month, okay. This is the loan, which is the first line, monthly payment loan, life insurance, and property insurance. If you sum all those 3 items, you have the global monthly charges, and that's all for global monthly charges. The question is how much you paid for making the loan in Portugal at the beginning, one shot payment. And it's important to make the difference between 3 things. Okay, first of all, is your own capital, okay, which is a little bit is down there. It's the minimum or the value you want to put on the business, which in general circumstances should be at least 20 to 30% of the acquisition amount, depending on the banks, which is that 80% of amount finance or 70%. So the own funds, the money you should put in the deal is the own fund. So that is one part of the initial charges. They are not charges, I know, but well, what you must pay once in the deal.
Yeah.
And then you have 2 types of charges: the loan charges and the acquisition charges that are independently of the way you use to make the investment. That means that their acquisition charges means that you will pay whether you pay cash or you pay by finance. And beginning with the acquisition charges are only what we call transaction taxes. Okay, if you want to buy a property in Portugal, you pay 2 taxes, which is what you can see here: EMT and what we call stamp tax, which is something that nobody knows what exactly is, but is. And you must always count those kind of taxes are not a percentage, a defined percentage. First of all, is increasing. You pay more as more expensive is the property. You can pay up to 7% on acquisition taxes for more than, I would say, 800 or 1 million. I don't know the figure, but you can pay up to 7%. In this case, you are talking about for 300 you are paying 12, so it's around 4% off. Okay, you are paying around 12,000 euros for 300,000. So this is what they call transaction tax. And you've got another one which is to 2,400, which 0.8% on the amounts on the acquisition price. Those costs, those taxes are paid regarding the acquisition price, and you must pay all the time if you want to buy a house. Okay, whether you finance or not. Okay. So and you should count between 4 to 7% of the total investment are taxes, transaction taxes that you must pay to the state. They are not financeable. Banks will not finance, and you must put it up to your own funds. You must have the money to pay those taxes, because those taxes are paid directly by the customers in the deed day, directly in the POS with a debit card, directly to the bank account of fiscal authority in Portugal. So it's done. So here, that's why you now have you have the own fund plus the acquisition charges, that depending on the value that we use.
So sorry, what were the acquisition loan charges? I assume that's like what the bank charges for their processing fees and things like that.
Yeah, the loan charges, which are these amounts 2.8, 3.2,
Yeah.
2.9, they can be seen a little bit above, are basically.
Oh, okay.
One of the values is also taxed, is a stamp tax for loan, which is 0.6% on the value of amount finance, which is taxes one more time. Taxes is something that you must understand if you want to buy in Portugal. You will have it for everywhere. Okay, and the rest are what we call, part of it are fees. You have two fees, which is the first one, which is you have here around 400 euros of fees, are the two first on the tail of the initial charges, and then expenses. What are the expenses banks would have to regarding the loan? Is the property appraisal, because they will ask for a property appraisal to an external expert, is one of the items which is here. And finally, the cost of the deed. What is the cost of the deed? What you need to pay to lawyers to sign the deed. So that's why when you look at here, everything is here. That there is no more adding costs for buying a property in finance in Portugal, but they are always all of them here, which are, for one side, the money you must put on the deal by yourself, plus the taxes you must pay for acquisition, and plus the fees and the charges to having the loan, and that is all. Well, it's enough. Anyway.
Got it. Yeah, it's enough. So I see. So then we have like own capital. So that's what we have to bring like our money down. And then global front payment is like including all of those additional fees that we discussed.
Yeah. Yes.
So that's really the total that we have to bring forward to be able to close.
Yeah.
So own capital plus additional global
but
front
let
payment.
me see. If you scroll a little bit up, I'm finding here an error on my table. Sorry, can you scroll a little bit? Scroll up, the opposite. Yeah. Okay. Yeah, I made a mistake here because as you see here, I reduced the value to 300 euros, and I reduced here that tax transmission on the first column, and I forgot to change in the other column. So the value of the other, I will change it, just send to you.
Okay, no problem.
Because 17 was the value that you would pay in transaction tax for 360,000 euros of acquisition price.
I see.
And then it's 12. So I didn't change the line. So it's 12 in all.
12 all the way across. Well, that's
I will
good
change
news.
it and I'll continue. Okay.
Okay, so that's great. So then that also would bring down this amount here. Like, for example, like I'm thinking maybe like NB could be a good fit for us because we have to put less money down. And down here, I scroll down. So I look at, if I was to work with NB, for example, so the Euribor is at 0.992, which like you said, you have to add a point or so to that. So we're really looking at
1.2, is the bank margin,
1.2. So we're looking at our actual interest rate being 2.19.
Yeah.
Okay, for a term of 360 months.
Yeah.
And they would finance about 240,000 for us. So that's great. So that would make our monthly payment about 910 euros a month.
Yeah.
However, there's going to be the addition of life insurance, property insurance, and altogether that's going to be closer to 957 euro per month. Okay. And then we have all of these different closing costs, basically is what we call them.
Closing costs from bank side, what you are looking at. This is bank costs.
Yeah, bank costs. Okay, so we've got the bank costs here, and then we have taxes as well. So that's saying that we're going to be bringing forward a down payment of about 60,000 plus the fees associated to close this would be around 83,411.
You must take out 5,000 because instead of 17,000 of VMT is 12. Okay, so
good news. I like the sound of that going down.
So it will be a little less than 83 because we must take the 5,000 to correct the value of VMT.
Okay, so that's helpful. So to buy something for around 300,000 euro, we'd be looking at around just under $80,000, 80,000 euros out of pocket
Yeah.
to be able to do this transaction. And then we're looking at our monthly payment being that around 957 euro.
Yeah.
Great.
Or-
And that would be for the variable, which you're recommending given the rate's kind of high right now and likely over time.
I do not
that's gonna come down.
recommend this is the kind of recommendation that I cannot assume.
Right.
If this is recorded, I don't want that. This
Right,
guy
right.
say that variable is better than fixed.
Sure,
Choosing
sure.
variable or fixed is a decision from each customer, depending on the aversion to risk of
Yeah, right.
some specific customer.
Yeah.
And first of all, what I would say is that if the difference between fixed and variable rate is small, I would say less than 1%. I would say that if you have a little bit aversion of risk, fix the rate. Okay. The question is, and what I said is that today the interest rates are so volatile, and especially the fixed rates are very, very volatile.
Yeah.
Why? Because fixed rate is not a market rate; it's an expectation of market rate. So that's why, for instance, in 3 months' time, he had a fixed rate on 2.6, then in 2, now we have 2.6 again. And that means that the market is confused about what will happen. They don't know very well what will happen. So what I say is that if you are averse to risk, be careful before accepting any kind of fixed rate, because you can fix a rate on a very high price. And worse than that, those are simulations from August. The rates, either they are variable or fixed, they will be fixed for the first month only in the month of the deed. Imagine you are making simulations now and you make the deed in October. Imagine that if you have in October a fixed rate of 2%, I think it can be a good thing to fix the rates if a customer is has aversion to risk.
Risk averse, yeah.
Risk averse, yeah.
Right.
But imagine that you have in 3%, because these rates today are changing very, very sharply. And I would say that, in my opinion, if it was with 2.6% base rate, fixed base rate plus the spread, it means an interest rate around 3.8%. I would not fix the rate for 30 years. Okay.
Right. You personally wouldn't make that decision.
Okay.
Yeah.
But fixed rates are good things. Okay.
Yes.
Especially if they have they are not a very high premium. Okay. And especially, as you said before, it's the right time to get a fixed rate is when the expectations of rates are stable for the future, because you can have good fixed rates for all the countries, because we cannot forget that we are fixing a rate for 30 years. Nobody knows what will happen in the next 10 years in the world.
Right. Very true.
If and there is no the best situation, and you touched that situation very clearly. If we want to have a fixed rate, the best situation or the best time to fix a rate is when the market is stable. Okay.
Right.
Is exactly when nobody wants to fix the rate, because they think that the rates will not go up. But it's the good time to fix the rate. That's why you can begin with a variable one, and if in 5 years or 4 years you find out that you have a new good situation and the fixed rates are low, that is a good time to fix the rate.
It's
not when the rates are going up, because the fixed rate will be very expensive.
Yeah. Right. No, that makes a lot of sense. It's interesting.
Don't tell me that I don't want to fix rates, because this is a personal decision, but
right. It really, I think, depends on the person's preference as well. And I always say, I mean, don't do a deal if you think $100 or $200 a month is going to totally put you underwater and you can't make your payments and things like that. I mean, make sure you have some wiggle room and you're able to pay things like that, because things can come up just even in repairs and whatnot. So, On the other side, though, interesting, I didn't go over the fixed rate ones yet. So the fixed rate, for example, you were saying that interest rate looks higher. So it's called swap rate 20-year instead of the Euribor. So over there, they start with 2.2 in the interest. And
Those
then
were the rates of August. In September,
fixed-
they jumped to 2.6. That they are
Yeah.
not this one anymore.
they're even at 2.6 now. And so then you were saying that's like more like a 3.5 now too. So I mean, that's a pretty significant difference to go from that, like the the 2.19 over to, but that's, again, that's fixed, but then you're stuck with it for the whole 30 years. Unlike on the other side. So, and everything else I think holds pretty much similar to the other side. Really, that's the only difference with the fixed
rest
rate is right
similar,
there. The rest is the same. Okay. Well, this was really, really helpful to go over. Well, I hope you found that little overview helpful and you're getting a feel for the mortgage options in Portugal, including some of the additional costs that you have to incorporate, like life insurance and property insurance, and the differences in assessing whether you would want to go with a fixed or variable rate. So lots to consider, lots of opportunities, and lots more to learn. Please stay tuned for our next video that will cover more on the process of buying property in Portugal.